Scott Groves here with another mortgage mystery. Why are the fees on your initial disclosures so expensive, and is your loan officer lying to you? I get this question a lot. It most recently came to me from one of my favorite realtors named Kenya, asking, hey Scott, how come on the initial disclosures, when you send them out when a client gets their offer accepted, are the fees so much higher than what we know they're going to be at the close of the contract? Well, this is a very confusing situation, and it can be a little different depending on the geographical area you're in. So here's the long story. First of all, your lender might just be in a rush. Every transaction is under a crazy deadline right now. So frequently when we send out the initial disclosures to our client, meaning the offer has been accepted, and now we have to start working on things like the final loan approval, ordering the appraisal, the client's got to get their inspection done with their realtor. Things are moving very quickly, and that leads to possible mistakes in the first 24 hours. So what I always tell people is on the initial disclosures, you're not locked into having to close the deal. Everything can change slightly or dramatically. So as long as your name and your social security and the property address of the home you're buying is correct, just move forward, sign the disclosures, send us an email with all your questions, and we can update them. So the first reason might just be simple mistakes and error that happens when you're trying to do quick speed to execution. The second reason why the initial disclosures might be showing that your closing costs are higher is because the lenders like to put some padding in there and overestimate. Because here's what happens. If for some reason the fees or the costs or the interest rates go up during the transaction, the lender has to stop everything they're doing and re-disclose the file to give you a new set of fees. And then there could be 3 days of a waiting period, federally mandated, where we can't even be working on the file because we have to give you 3 days to review the new higher fees. So it's easier for lenders to estimate a little bit high, and then as we dial everything in and we fine tune the numbers, we bring the cost down a little bit. Now there's something else that's interesting that happens in a lot of geographical areas, and I run into this most when I'm doing home loans in California. The mortgage disclosures are set at a federal level. So every set of loan disclosures across the entire country are required to disclose the same type of fees and information. Well, the problem is here in Southern California, it's customary in 99% of transactions for the seller to pay several fees on behalf of the buyer. So, for example, there's two large fees I'm thinking of off the top of my head. One is the county transfer tax. That's the tax that the counties throughout California charge to transfer the house from the seller to the buyer. And the other fee that I'm thinking of is the owner's title policy, meaning the title policy that the owner gets to make sure that the house is legally transferred from the seller to the buyer and to make sure that nobody else has any liens against the property. Well, those two giant fees have to be disclosed on the initial loan disclosures because, again, these are set at a federal level. However, it's customary for the seller to pay those fees on behalf of the buyer. So it's a little confusing. I will frequently call my clients and say, look, here's the deal. You're buying a $500,000 house. Your closing costs are about $8,000 by the time you pay for the appraisal, the lender fees, the title fees, the escrow fees, the notary fees, the county fees, the fees. You'll spend about $8,000. But, Mr. and Mrs. Client, don't be alarmed when you get the initial disclosures and it shows a total cost of $12,000 or $13,000 because that's what the lender has to disclose to you. However, many of those fees are going to be paid for by the seller on your behalf. So, simple error, overestimation, or this kind of issue of the federal government and their disclosures not jiving with what's actually going on and customary practices in your local area. So this is where you have to be working with a trusted loan officer so they can talk you through all of this stuff. And you know, when you get to the close of the transaction, you're safe and all the numbers will come out exactly as your loan officer suggested and guided you on day one of the transaction. As always, Scott Groves Mortgage Mysteries. If you have any questions about initial disclosures, closing costs, or the total amount of money that it's going to cost you to buy a home, then please shoot us an email, comment below, or get on our calendar. My Calendly link is in the comments below. We would love to help you with your home loan. And if for some reason we're not licensed in the state where you're buying a home, we've got a pool of amazing loan officers we can refer you to.